Hello, today is the end of April. I can't believe it. Time flies, right? I want to talk about all the amazing updates that are happening. I shouldn't call them amazing. Incredible, because there's a lot of things happening in the student loan world. So I'd love to talk about those updates. And then I want to talk about what are some action steps as we enter repayment, which will be in about 3 months. About 3 months at this point. So what is it that people can do to check their credit reports? What is it that people could do to better manage their servicers? Because there's significant financial cuts to the federal student aid department in this Congress's 2023 budget. So what is it you as a borrower can do to make sure that your student loans maintain good standing and do not negatively impact your credit? So that's what we're going to talk about in this episode. I'm going to start first by addressing what's happening in the student loan world. Because that, of course, is really important for student loan borrowers. So first and foremost, what is happening? There's a lot of predictions and projections by legal experts that say what I was predicting as well, that the Supreme Court will likely turn down the $10,000 to $20,000 of federal relief. The Supreme Court has gone in and defended the $6 billion in extra relief for borrower defense, but legal experts are predicting that the justices will turn down the blanket $10,000 to $20,000 of forgiveness because of the bipartisan split of the court. Unfortunately, it's become political, which the court was meant to not be political, but somehow it is political right now, and so it's the most political that it's ever been in our history. So that may be what prevents the $10,000 to $20,000 of forgiveness. Then I also want to talk about briefly in the news. Give me 1 second here. I want to talk about now the cut in funding. So while we have not been in repayment over the last 3 years, all the federal student loan servicers have cut pretty significantly their customer support department budgets and have cut away. If you can imagine, if people are in active repayment, you have a core staff of people answering the phone, for example, people processing paperwork. But since we've been in pause and 99% of Americans have not been paying their federal student loan, well, guess what? Mohila, Nownet, Great Lakes, all these servicers have cut their customer support departments, which makes sense because they have less need for them. And now we're about to restart payment, but the level of funding to provide support to these servicers have not been as great as the Biden administration would like it to be. And as a result, we may have some really customer support mayhem once repayment starts, because not only have 99% of borrowers not been in repayment, but there's also been a pretty significant cohort of people that have graduated in these past 3 years that have never entered repayment. So there's all kinds of systematic work around starting borrowers into repayment already for those 3 years. But then in addition, everybody else is going to have their repayment start. So the reason I mention that is because without increased funding to prepare these servicers for repayment, there may be significant customer service backlogs in which, if you're going to enter repayment into a projected amount that you either know from pre-pandemic days or you will receive shortly before you enter repayment, and you're not sure if you can afford it, I would call and find that information out ahead of when they even publish it on their dashboards. If that's a concern for you, I would call now. If you need to enroll into income-driven repayment, which we help borrowers with, or get their employer certification paperwork in good standing so that they can get credit for these 3 years that we have not been paying, because you can get credit towards as if you have been paying towards loan forgiveness, then you need to go ahead and submit that before the end of May, because you do not want to be waiting closer to repayment, because the customer support backlog will be gigantic. So I'm going to put that out there. As a borrower, if you are in an income-driven plan, you need to submit paperwork to reduce that payment or to maintain. The paperwork technically during this pandemic pause has not been due. they pushed recertification due dates to December, right? But still, like, we don't know when the customer support backlog and issues are going to end. It's better to recertify early and to get it in ahead of the rush of people that are going to try to figure out the issues or recertify between the time we pay and even December. We'd encourage recertification early. There's very specific information you can check to not enter into repayment by recertifying now that we help borrowers with. So if you're concerned and you're a planner and would like support, I mean, we're here with completely free analyses at app.myloansense.com, or you could just come to myloansense.com and we can help you kickstart that paperwork process as well. I want to warn people and put that out there, because the lack of money for the customer, it says here in this article in The Hill, the lack of money for customer service in the industry can be traced back to the denial of increased funding to the Federal Student Aid Office from Congress last year, and then also it's continued this year. So it's really important to consider that FSA's budget constraints are certainly affecting servicers, and I think there's an incredibly huge problem because it affects the ability to effectively support the student loan system. All of the things that FSA has on its plate, for example, implementing Biden's new income-driven repayment plan that's in the pipeline, along with, of course, Mohila now is the PSLF servicer, for example. A lot of people's student loans have been moved. Besides that, there's tons of initiatives with bar defense that will need to be implemented, and there are a lot of different initiatives beyond what I just mentioned here. So that's a warning. Call to action. Do something with your student loans ahead of 2 to 3 months ahead of when repayment is due, and do not wait until December to recertify just because we do not know what the customer support and paperwork backlog is going to look like. Okay? Also, there is the end of December deadline to file into the income-driven repayment adjustment to get credits for prior forbearance. Just know that if you've ever been in forbearance and Biden has funded extra ability to get credit towards that, that deadline has now been pushed to December, which is good, but also do not wait until December to get the paperwork in order. As in, if you're in standard and want to enroll into income driven, do not wait until December. Now let's talk about the last chapter of this video, which is when repayment kicks in, what can you do to make sure there is nothing negative on your credit report? Because we've heard from quite a few borrowers that the servicer, especially at the beginning of the pandemic, accidentally reported late payments to the credit reporting agencies. What can you do when repayment starts again to make sure your credit reporting is accurate? Is once repayment gets kicked in for a few months, I would recommend that people pull their credit report from freeannualcredit.com. Let me check. Oh my God, now that I'm saying it out loud. Free annual. I'm looking at it right now. I want to give you the accurate site. I'll link to it below because I don't want you to pay. There is a site, and I will link it. Okay, sorry there. I was like saying it out loud, and I'm like, I need to double check this. It's annualcreditreport.com. That's the site, not free annual. I'm sorry. I misspoke. Annualcreditreport.com. It's the only source for free credit reports. You can get a free credit report from all three bureaus once a year. What I recommend people do is they stagger the request across bureaus, so they could even check up to 3 times a year. But I would pull your credit report after student loans get kicked in, especially if you're enrolling into an income-driven repayment plan and your payment's been adjusted down. I'd wait for a couple months into repayment, pull annualcreditreport.com and see that the servicer is accurately reporting your on-time payments and what the payment is. And the reason I say this is because especially if you change plans from the standard plan into an income-driven repayment plan, you want to make sure the servicer is reporting accurate information. There's usually a 45-day lag from payment and change of payment to reporting on the credit report. The reason you want to make sure that that's accurate is because if your standard payment, let's say, is $700, and now you've gotten into an income-driven plan where it's $200, they're misreporting it on the credit, even if they're saying you're making an on-time payment, that literally can impact your affordability for mortgage, other financial products by $500 in that debt to income, right? In the example I'm using. So you want to make sure it's reporting accurately. You also want to make sure they're reporting that you're making on-time payments. You want to check in on the servicers, because with this crisis of lack of funding, basically, we just don't know. We want to be responsible to make sure the information is accurate so that it doesn't hurt us down the line when we try to go access, increased limit on our credit cards, try to buy a home, try to access our credit. We just want to make sure that information is accurate. I hope this information has been helpful to you. If you like all content around student loans, around financial literacy, topics that I try to address even outside of student loans when it's relevant to student loan borrowers, please do like and subscribe and share. Knowledge is power. Please share this content with those with whom it may be relevant, because I do try to provide really golden nuggets, tips on how to manage your student loans. A lot of the consumers that come through LoanSense.com, but in general, all this information is free, open to the public, and we want to focus on educating people as much as possible. So please do share, like, and subscribe, and we cannot wait to see you again next week.